Lou Basenese with me for the hour now. You say Mag 7 companies are driving this bull market. They're not driving this bull market anymore.
Not anymore.
So what is?
Like your favorite boy band, they broke up. They're not together anymore. Nvidia and Alphabet were the only two that outperformed last year. Everything else in the market is doing really well. I mean, this is probably going to come as a big surprise to people. Tech is actually down. The sector 1% on the year. The best performing sector. You want to guess? Energy, up 22% this year. So you're seeing a broadening out of this bull market, money rotating from the really highly valued names to energy in particular, which was undervalued at 15 times earnings. And if you just look across, there's over 300 companies in the S&P 500 now, about 66% of the index, that are outperforming. It's no longer overly concentrated just in tech.
Trouble is, tech investors like myself don't want to sell out at this point because we pay a whopping great big capital gains tax.
I agree, and I don't think you need to, because if you look at the earnings growth for the tech companies, they're still very high, right? I mean, you're double digits, into double digits, 20%. So those prices, your beloved Microsoft under 400, I think is a buying opportunity for sure. I think it regains that glow and performance that it's had for so long. So I wouldn't sell it either. I'd hang on to Microsoft, but I'd be looking for names in undervalued sectors like energy.
When are we going to get to, are we going to get any rate cuts this year?
Yes, I think we actually get 3 to 4 rate cuts. In fact, yes. I think everyone's consensus is completely wrong. You're misreading the jobs print. I look at the software industry, and software job postings on Indeed have absolutely cratered. So I think there's more dislocation coming from the AI jobs boom. And inflation is not really close to 2%, or 3%. It's actually below 1% based on the true inflation numbers. I think Kevin Warsh is going to get in here, and he's going to lower rates just like the president wants. And I think the data actually supports it, despite what some of the headlines say to the contrary.
President Trump and investors alike would like that.
Look, I think we need 1% interest rates to get this economy, get to that 15% GDP growth over 3 years.
That I would love to see. 15% growth. Wonderful stuff. Thanks, Lou. Stay with me for the hour, please. Lou Basenese, though, he has a stock pick to get us over it all. Invesco S&P 500 equal weight ETF.
It's a mouthful, isn't it? Yes, so here, we were talking about it earlier that Mag 7 is the boy band that broke up and is not performing. How do you profit from that? It's this ETF. This is an equal weight ETF. It's up about 5% on the year versus the S&P 500 market cap weight that's only up about 1.5%. So think of this as the anti-tech concentration trade. It's an easy way to make double-digit gains as this outperformance of the unmagnificent 493 continues for the rest of the year.
All right, another stock pick of yours is Terawulf.
Yeah, I love this. Now, AI is coming under question. Is it going to be as big a deal as everyone thinks? I will tell you what, the bottleneck is compute power and energy. Terawulf is a Bitcoin miner that pivoted to AI compute. They have data centers primarily in New York. They've now expanded into Kentucky and Maryland. This was a stock that was at about $9 when we first talked about it in August of last year. I think it can go as high as $40 to $50 on the business that they have in the books and the capacity that they have, because there's such a shortage of it.
You're whetting our appetite.
Yeah, well, so, I mean, more than a double from here gets everyone excited, but I think that's actually conservative. Morgan Stanley's analysts come out with a price target of about 38.
See what you did? It blipped up.
Yeah, definitely not. It's too big of a market cap for that. It's you. It's your viewership.
Yeah, thanks, Lou.